Hello and welcome back to episode 8 of Let's Play Wall Street Raider. I'm RakeM, your host. And today we're going to be shaking things up. But before I talk about that, let's recap where we are. We bought Millennium a long time ago. We've been sitting on it for quite a while. Our target price was $88 a share. And we've been above that for quite a while. But we haven't seemed to be getting up too much higher than $100 a share, so we're going to go ahead and cash out our profit and put our money to work somewhere else, because while it's fun to have Millennium in our portfolio, it's not making us any money. So it's time to let that one go and find another place to grow it. Same thing with Cisco, although we haven't held it as long. We bought it at 15 and we have tripled it almost. But we overpaid for Cisco, so we never expected our return to be quite as good. And right now it's trading at about 500% of its value, so we're going to sell that one, take our profit out, and try to put it to work somewhere else where it has a greater return. And Nippon, which we have also held for quite a while, has finally started to climb. Our target price on that one is in the $1,800 range. We finally got the industry and Nippon itself in a good situation where its income is growing every month. We neglected to cancel some interest rate swaps that it had on its books, and so now that we've eliminated those, we're hoping that the income will skyrocket and we'll see an immediate rise. We may be able to sell it by the end of this episode, but hopefully soon. Hopefully within the next 3 quarters, we hope to be able to sell that one. At the end of episode 7, we started investing in the integrated oil industry. It looks to have growth. The oil price has been climbing, and we will short sell it if it gets up above 140. But the companies in the integrated oil industry are not growing. They're currently trying to optimize their profit rather than expand. So we hope to take advantage of that situation with Royal by eliminating their debt and having them grow. So if the other companies don't want to expand, we can have Royal expand, and hopefully we can triple our money, because even though they're a lot of money, they are a rather minor factor in the industry, so there's plenty of room for growth. Alright, aside from all that, I have some futures on wheat. Wheat has been climbing lately. It has seemed to have peaked out in the 675 range. We were hoping to get it up to like 750 or 8 before covering our position there, but it hasn't really moved from 675 for a little while, so if it gets above 7, we'll cover it. If it drops to 650, we'll cover it. Alright, and the only other asset that we have is the bank, which is still profiting from its interest rate swaps. With the interest rate low, we are only making around $300 billion a month instead of half a trillion, but that profit will continue. Now that we have no control over whether the interest rate goes up or down, so we're kind of at the mercy of the interest rate in terms of what we will make off of those swaps, but it's not a question of whether we will win or lose, it's just a matter of how big we will win. So once we sell Millennium and Cisco, we can have SunTrust unfreeze the other loans that it has frozen in those industries, because we'll no longer have a stake in those industries, so we will be more than happy to continue to loan to those companies. That'll also, most companies in this game, they will expand as far as they can until it's unprofitable to do so. And even after it's unprofitable, sometimes they still try to expand. So we're happy to extend them credit, because it's just more interest payments to us, as long as we don't have a stake in those industries. So once that's done, we will use our extra cash to buy up loans in the integrated oil industry, because if those companies decide to start expanding, we'll want to put the brakes on them so that Royal Dutch can continue to expand at the maximum rate. So we're going to go ahead and sell off Millennium and Cisco, and we will then pay our tax. And then I've got a few game features that I want to share with you that I haven't talked about before. So let's go ahead and proceed, see how much money we can make this episode. Alright, so let's get to it. First we're going to sell off Millennium. We had a 400% gain, so that's excellent. I think that might be the highest one we've had so far, percentage-wise. And we're going to go ahead and sell off Senecor 2. And we're going to take a loss on that one, but that's fine. Okay, now we're going to sell Cisco. And this one will probably be about 250% return because of all these taxes. Yeah. Okay. Now, I think we've already looked at the shorted positions. Both of them are still going broke. And we looked at, Royal Dutch just had its earnings report, so we looked at it right at the last end of the last episode. Its earnings per share is going down compared to last quarter, but it's going up compared to last year. So it's fine. We just upped its growth percentage and its R&D. So it's natural for its earnings to go down for a quarter, but it should go up after that. So we have $500 billion to invest, and we need to pay our taxes first. So we're going to owe another $56 billion. So let's prepay that. Okay. So we have $500 billion, and we need to find a place to put it to work. Now, ordinarily, we've been going to the general menu and then industrial growth rates, and we've been looking for stuff to invest in this way. But there's a few other ways to do it. One is, and you know what? Let's turn off the cheat menu too. Let's turn off the cheat mode. Because at this point in the game, the downside is always bigger than the upside. Okay, so even with that turned off, we have a cheat menu here. Oh, well, I was told that this would still work, even with cheat mode off. Alright, let's turn it on. Okay, if you go to the cheat menu, you can add or subtract cash to and from your account, which we're not going to use. If you use that, the game will no longer track your high score. Okay, you can obtain inside information, Gordon Gecko style, regarding upcoming mergers, and then regarding earnings. So if we click this, you get a message that if you get investment advice, that it's not for free. Okay, let's go ahead and read through this, because it's been a while since I've looked at this, and it might be new in this version. Your new source of investment advice, who works at a major law firm, does not have any useful company earnings information for you now, but suggests you check back with her in a month or two because of your enormous wealth. She doesn't have any valuable inside information on earnings of any client companies that are large enough to be of serious interest to you at present. She and a few other people at law accounting, and investment firms are able to leak sensitive corporate information they share with each other to outsiders like you. While she has nothing useful for you now, she or other members of her network may have some good intel on upcoming earnings surprises or mergers in the future. Not for free, naturally. Okay, so I guess there wasn't anything. I guess we just have too much money. What about upcoming mergers? According to your newest would-be investment advisor, a janitor at a major brokerage house, one of that firm's clients will soon be a merger target, as the client company is currently in secret merger negotiations with a large company that plans to acquire them on a very favorable terms next quarter. Your source knows you to be a very savvy corporate raider and one without any scruples about how you make your money. And he says his information could be worth millions or even billions to an investor sociopath who simply buys the stock of the target company or options on it now or very soon, before the merger news comes out and the odd lotters close or chase the price up. This is highly illegal inside information, and you will be risking jail time and or huge fines, of course, not to mention creating bad karma for yourself. Do you really want to know the identity of the target company in this upcoming merger/takeover? And are you willing to pay the tipster $1 million for this critical piece of information? So this is something that you can do to take some risky gambles on making a quick profit. I'm not going to take it. This is something that you can do early in the game if you want to have a quick run up of your dollars. It's like when you have $1 billion, if you want to take a chance on this, you can. If you don't want to wait for the cheat menu scenarios to help you out, you can use that. Another thing I want to show you is on the general menu. This is where we've gone to a lot for our interest rates, economic statistics, the growth rates, etc. But what I haven't pointed out is over here on the left is a daily market commentary. And this kind of reads like a Wall Street Journal. So it's all the news on financial and commodity markets, the economy, and some analysis. So it tells you what the interest rate is doing. It talks about the near-term prognosis for whatever company or whatever industry has, some major news coming up, or it just analyzes what's going on. So like this one talks about the integrated oil companies, the near-term prognosis, and it could be that it's showing us that because RD was, Royal Dutch was what we had selected before us. The near-term prognosis is for continuing heavy profits for the integrated oil companies industry, as analysis expects demand to outstrip growth and capacity. However, companies that have hedged part of their future on oil production, companies that have hedged part of their future oil production at lower prices are missing out on much of the profits from this commodity boom. The high oil price is the main factor in boosting current industry profits. However, the crude oil price has been falling for the last year. Has it really? I thought it was going up. The integrated oil companies industry is a mature industry which can be expected to grow at a rate of about 4% a year in the long term. At present, however, demand is growing at 20%, well above its normal expected growth rate. Okay, so the economy and the markets. At present, the global economy is growing at a moderate rate of 3.7%, which appears to be sustainable. Now, we got some news about the trade stuff going on and all this political turmoil. I don't know that this is taking that into account when it talks about it being sustainable. But anyway, the GDP numbers show the economy is growing at a faster clip than 3 months ago. The bank prime rate has fallen sharply from 10% a year ago to 6.25 at present. The stock market has soared up 40% in the last year. I'm sure that's referring to the index. Analysts predict a rise in oil prices while interest rates are likely to decline. crude oil in the spot markets continues to trade at elevated levels. Okay, so, and the price of crude oil is up 19% since the beginning of the year. See, so why is it telling me that it's dropping up here? I mean, maybe that's looking back a year, and this is only looking back a few months. Meanwhile, in metals trading, the price of silver is down 12% in recent months. In the grain markets, wheat is up 72%. Yes, let's hope that keeps going. Corn prices in the Chicago market are up in spectacular fashion, 51% so far this year. So, it's a lot of this information you may already know if you're paying attention, but it's nice to have, this confirmation that what you're observing is accurate, and can point you in the right direction if you're trying to make a decision. So, let's see if it's any different for, let's say, where's Nippon? There it is. So is it talk about, yep, here it goes, talks about global communications. So let's see what it says. The 6-month profit projection is excellent for global telecommunications as analysts expect demand to outstrip growth capacity. The telecom industry continues to expand into third world markets that are not yet saturated with smartphones and other mobile devices, generating high returns on capital. The global telecommunications industry has good long-term growth prospects estimated at 8% per annum. At present, the global economy is growing. Okay, well, this is what we already read. But it's nice to have that little summary of what's going on in the industry. Right? And here it is, the industry itself. And we're growing at a good clip. And this is the growth rate. So, basically it reads like a Wall Street Journal. And you can have it tailored to whatever company, as far as what the industry analysts are saying. You can just select your entity and then read what it has to say. So for banking, banks are expected to benefit from the low interest rates. In the current low interest rate environment, banks are lending more freely by extending larger lines of credit to corporations. At present, okay, and then the rest goes on like we already read. Okay, but it's a fun little feature. I like it. Another thing that I haven't pointed out before, this window for all this news is very small. And sometimes things go by very quick because a lot's happening at once. So you can look at a much larger history of all of those messages by clicking on the View News here on the General menu. So if something caught your eye and you want to go back and look at it and it's already gone out of the window, you can come here and look at all the news that's been happening. Okay. So those are some features that I wanted to show you that I hadn't shown you before. Who owns what is also kind of a useful feature. If you want to see who has commodity futures, owns physical commodities, who has interest rate swaps, who has options, who owns stock in other companies, who has investment management contracts. Okay, that's something that's new. I don't know much about that feature. I don't know that we're going to explain it because I don't understand it yet. I need to play this game a little bit longer because I've only had this version of the game for like a week before I started this series. So there's still some new stuff that I don't fully understand. Another thing that's new to this game, new to this version, is for sale items. So companies, as they are, while they're downsizing and they want to sell off their assets, they'll put some of their assets up for sale, or they'll put stocks up for sale. Okay, so we could buy 26 of Payne Weber right now. It's currently not traded, so if we tried to just buy it on the open market, we couldn't. And then here's, I think this is assets down below. What is this down here? Business assets offered for private sale. And this one is stocks offered for private sale at 95% of market value. And this is the same 95% of market value. So here's some business assets that are up for sale, what industry they're in. So here's integrated oil. So we could have Royal Dutch buy that. So some interesting things that have been added. All right, so the next earnings report up is Nippon on the 17th of November, and we're going to fast forward to that. Okay, I know I said I was going to fast forward to the 18th, but wheat has gotten up to $7, and we're going to go ahead and cover our position there. I don't think it's going to stay there for long. So I'm going to go ahead and cover these. Take my profit, because it looks like I'm going to want it to put it in oil if oil keeps going up. Alright, so let's get to Nippon's earnings report. Alright, nearly $12 a share, up from $8. And we beat the estimate. And we have enough cash now to pay off the rest of our loan. Got to select Nippon. Okay, so our projection is 13 for next quarter, which is excellent. And our stock price should jump now. Alright, since it's been a while since I've calculated it, I want to recalculate what our target price is for this. There's 1,000 or 1 billion shares outstanding. So let's go to the bank and go to the tax basis info and see what we put in. We put in 388,252 times 5 divided by 1,000. 1941 is what we're aiming for. Okay, so we're not even close. What's the net value? 367. Boy, 1900 was going to be tough to reach. That's a 600%. Well, 550. Let's see. 367, 44. Oh, I needed to do it the other way. This divided by 367.44. Yeah, 530%. We might be able to get there. Just depends. I bet you by next quarter we'll be up to 700. The question is how quickly it'll move up from there. And what that depends on is the growth rates that these guys set. Because our earnings have already gone down to 23%. So we could buy up some more companies, but we already have 32% of the industry, so I'm not sure that that's a good idea. Let's see if it's deteriorating or not. No, it's still improving. And we're very capable, and we have no debt. So we can't use paying debt down to use as a way to increase income either. So without that, we still, see, we're already up to 600. So without that, we have to just keep growing, and to keep growing, we need this to continue to improve. because our return rate is a little bit low for growing at this pace. I'd like to have like 30% to be doing this. But since our earnings were depressed earlier with all those interest rate swaps, it might be enough. Alright, so we're going to let that ride. Alright, I want to look and see how much cash. Okay, so the bank has enough cash that I can start investing this now, so let's take another look at Royal Dutch. Alright, I'm pretty sure there's some more companies in this industry that can be purchased for a decent price, and pretty much all of these can. Any of them that are between 100 and 120, 130, I'd be fine with buying. Because look at that growth rate. And the price of oil is going up, so the profits should be nice and big. Of course, we're lower than most of these. What's our management? Reasonably competent. Well, that should go up when we're spending 9%. So we can expand our presence by buying up some more companies, or we can simply grow from here. I'm kind of torn between investing more money in this industry and putting it somewhere else and having both of them run at the same time. Let's see if there's any other place that has a good that's a good candidate for investment. Again, double digits and 20 or above is what we're looking for. Engineering, that looks alright. What's this one? Internet? Boy, that one's really turned around from being negative, remember? A few episodes ago it was at negative 10. Let's look at internet. See if there's some bargains in there, because with it turning around like that, oop, wrong button, there might be some bargains. Wow, look at him, 521%, and he's negative too, so the industry should be improving. That's why you're getting such big returns. Okay, so these guys have very little credit yet left, and they're like 80% of the industry. A lot of these are going broke too. Let's look at Bazaar. E-Bazaar. Losing money like crazy. How big is he? Oh, he's already bankrupt. I wonder, we could probably sell his stock short and take, well, I mean, it's only like 20% of this number, so what, 260 billion, or million, I mean? So it's hardly worth doing it, but we could sell him short and make a quick 250 million. So let's see the ones that are actually a little bit bigger. Alright, so Amazon, let's take a look at him, see how big he is. He's $45 billion. So that's not even 1/10 of our cash. And he's making money. His profits are going way up. I mean, he's selling for a premium, but not that much. And he has a 7% share, and he's reasonably competent. So let's see. His price is too high. So 7, call that 10, 12, 15, 16, 17. Could buy him, of course he's only 0.2%. So maybe 18% of the market we could scoop up. Alright, let's figure out how much money that would be. So he's got 222 billion. And his market share is 47%. So the total assets in the industry is close to $500 billion. Alright, so if we multiply that by 0.18, it's this much, and figure the share price is at 120%. Make it 130 since there's working capital. And that's all the money we could invest for 18%. That's what it would cost, roughly. Ballpark, not exact. So, of course, it probably costs a little bit more than this, but anyway. I want to find a place to put the majority of my money, and this isn't it. So let's keep looking. Look at that, 43% now. Of course, it's too soon to go back there. Matter of fact, we need to unfreeze their loans. Let's do that real quick. Alright, so Alcatel-Lucent, they're in the global communications, so I'm not going to unfreeze them, but Chiron I can unfreeze. Genentech we can unfreeze. General Telephone we're going to leave. We're going to leave. IDEC we can unfreeze. Immune response. Is that all of them? Alright, Lucent I know is in network, which was where Cisco was, and we divested that so we can unfreeze them. And I'm not sure which industry he's in. But he is in network, so we can unfreeze him. Alright, let's go look and see what industry GTE is in. If it's this one or not. He's not on the list for this one. Let's look at Nippon. There he is. Okay, so we need to keep him frozen. This is sorted by return on equity. So naturally we would want to be up at the top. But instead, we're in the middle of the pack. Where are we? There we are, right in the middle of the pack. We got almost a 10% return on our assets every year, despite being the largest company. But it's partially because we're growing so fast. It's also because we don't have a great return. It's also because we don't have a loan. It's like AT&T, which was at the top of the list. Look how much debt he's carrying compared to what he has in equity. And so the amount of money you make is divided by your equity to get that percentage. So the less equity you have, the more debt you have, the bigger your number is too. It's artificially inflated because of the amount of debt. Because you're making income on this amount, but this is your actual equity. Anyway. Alright, so we're done on freezing loans. So let's still figure out where we're going to put this money. I think the best place to put it is probably the integrated oil industry. We'll just add to our investment there. We already have 13% and only 200 billion invested. So we could buy I think this is Repsol, Aquitaine. He's owned by someone else. We could buy, this is like Amarahata or something. What is it called? Amarata Hess. That's what it's called. So there's a few. There's quite a few we can grab. We could buy the assets out and put them all under Royal Dutch as well. You may have noticed that I like to keep them clean. I don't like to have a lot of subsidiaries. It's less work, especially when you have a lot of companies. But, we'll end up having subsidiaries later on. But I generally don't keep more than one company in any industry. It's just easier to manage. So we own 40% of him, but he's trading at such a premium that I wouldn't want to buy more at that price. I would rather buy his assets and just take that 11 billion and put it under my, or actually he has more than that. That was Amarata Hess we were looking at. So Shell has 80 billion in assets. So we could buy, enough to have him pay off his loan, or we could buy them all. Doesn't matter. The only reason to buy the entire company instead of the assets is that if we merge with this company, we'll get a bump in stock price because he's trading at such a premium. I'm not sure what the actual equation is, but like right now we're trading at 86% and he's trading at 270 something. Right? And so they'll take the two stock prices and figure out what the overlay is for the two based on the stock price and the merged company's overall equity. So if Shell Oil turns out to be 40% of the combined company, then that's how much of the overlay that we'll get. So that's a reason to do it, but from a pure cost perspective, it's cheaper to just buy their assets and liquidate the company. Now, if they bought the company at 40, you would take a loss to do that because you're only going to get whatever the net value is back. Anyway, it's a very involved process, or the figuring out which one is the best way to go. So let's see how much Royal Dutch has spent on Shell. Okay, so right now at 271, they would take a loss if they simply sold the company. So it's just a matter of degrees how much you want to lose if you want to buy their assets out from under and just liquidate it now. You would lose another 60% off of this because the equity is only $19 a share. All right, so let's look at what we want to buy, what other company we want to buy. Okay, so let's start with Aquitaine because he's at a good price. All right, so he's losing money right now. His management is somewhat mediocre. It has tax loss carryovers, which is good. And he's losing money to us every quarter. How big is he? Why, only 15 billion? Wow. So we can buy him for 18, call it 19, which is right at what he's trading at, so we wouldn't really be overpaying for him. All right, so let's buy him. All right, now let's see who else. ConocoPhillips? Nope, somebody owes him. This is E&I Petroleum, I believe. He's got a nice return rate. Let's look at Repsol because he's bigger. 14, even less, and he had more in assets. Look, but it's because of the debt. Well, that doesn't bother me. Is he owned out? Okay, he's 100%. And he's mediocre. And he's owned by somebody, though. No? He owns someone. Okay, so he owns YPF, which is really small. He's really small. So we could liquidate him without too much problem because he's such a small percentage of our overall picture. Okay, so let's buy him. All right, now who else? We own him. Elf Aquitaine, maybe? Or excuse me, E&I Petroleum, maybe? Let's look at Amerada. Small company, but we could buy him up cheap. He's trading at 48, so we'd end up paying like a 15% premium. But he would add to our asset base. He's partially owned. Losing money. Alright, we can leave him alone. Well, I was really hoping to find another one the same size as Royal Dutch. Let's look again. The Royal Dutch is all the way up here, though. So 4% here. We own it, we own it. We control it. All right, let's do this. Let's contribute some cash to Royal Dutch. Merge all these companies. Well, let's merge all these companies, and then we'll see where we're at. Then we'll give him some cash, and we'll increase his growth rate. Not too much, like to 10%, because we still want to get this number up. His return is too low. So let's do that. Okay, it's been blocked by bondholders. So let's see what Royal Dutch needs to buy back its bonds. 27 billion. So let's give it 50. Okay. Way ahead, a lot of bondholders. All right, let's look. All right. All right, let's buy those bonds back too. Wrong button. Okay. All right, now. All right, so now we've liquidated all but these two. Let's buy these bonds back. All right, now let's pay back the rest to our loan. All right, so we still owe $56 billion. We can probably change banks now because the bank has a lot more cash. Oh, it's already our bank. Okay, good. All right, let's see where we are. 17 cents now, which will be up from 49. Now we could use a boost in our stock price, and even if we don't get it, I can use this cash to buy back what I need, so we can merge with these two companies. So let's do that. Let's just keep this simple. So merger, Shell, yes, and we're going to offer the minimum, and 81% approved, so that's good. Okay, so Shell has some futures contracts that we'll need to look at. All right, so now we own 74%, and let's see what the share price is. Okay, it went up, but it's not above the net value, so let's buy the rest of those stocks. All right. So I own 100% again. The loan is $84 billion now, and let's look at its futures. Okay, so it sold it short at 190, and it's going down, so that's making money for them. Of course, their return on assets is lower because of the oil price going down, but that's what hedging is all about. So as the oil price goes down, their operating earnings go down, but we make money back from the commodity trade, from the futures trading. So I'm going to leave that in place because it's not a bad investment. All right, so now we're going to 20 cents, down from 36, but up from last year. All right, what are we rated at? Reasonably competent, market's improving, and our debt situation is at 1 to 4. So that's better than what I normally would put it. And we still have $300 billion more to invest. So where can I put it? I mean, we're already the market leader. If I invest the rest, we'll have 40% of the market. So I guess we're going to stop there and find another industry to put it in. And the stock price dropped again. Guess we got to wait for that earnings report to come out before it'll grow. All right, let's look at YPF. Yeah, see, he's only $2 billion because of all of his debt. So let's buy him and liquidate him. All right, continue to ease interest rates. Now that's the third time we've seen that and the interest rate has not gone down. So we'll want to keep a close eye on it. All right, let's see. Now we're more with 3 to 1, 3.5 to 1, so that's fine. Still reasonably competent, still improving, and our numbers going up. So, all right, I think that's all we're going to invest right now. And we'll just have to find another place to put our money. And we could buy this guy, and this guy, but it's just not that. They just don't have that much. We can just very easily grow this one that amount. And if the bottom drops out of this growth percentage, you know, we'll just have a harder time. So I think I'm going to leave it there at 20%. And when the next earnings report comes out, we'll see how much excess cash we had left over and decide how much to change our growth rate. All right, so I'm going to let this simulation run for a little while. And we will come back on January 4th. So interest income went down again, but keep in mind all that's being driven by the interest rate swaps. We have no control over how much those make. So 80% of our income right now is from the interest rate swaps. So there's nothing we can do to change our results up or down. The only thing we can do is to make sure that we maintain a very capable status. And now that we're there, our costs are down to 1.4% of deposits. So I can back down our R&D, our advertising, in the case of a bank, to 6% again. And next quarter, if we're still at very capable, I'll back it down to 5. All right, so let's see how much cash we have. 600 billion. So we're going to start buying up loans in the integrated oil industry. So let's go back to Royal Dutch. Oh, and Tel Labs went broke. They were in the network and telecom industry. And the bank took over their stock, what was remaining of it. So since we no longer have any stake in that industry, I went ahead and had the bank sell that stock off. It didn't have any loan left, so it doesn't matter to us what happens to it. It's such a small percentage of our portfolio, we just let it go. We just took the loss on it. So let's go to summary and take a picture. Okay, and go to paintbrush. Do a paste. All right, now go to the bank. and buy up some loans. Alright, start with BP. We may have already done this, but I don't remember. Okay. Devon Energy. Lukoil. Exxon. They're the big one, and they have the best credit rating too, so we're going to want that one. Mobil. Oop. USX Marathon. Petro Kazakhstan. Petrofina. Total Petroleum. Chevron. Let's check our cash situation. 192. Okay, we need to stop there so that I can spend some of my cash if I want to. So we're almost up to $1 trillion in our business loan portfolio. And we're only supposed to make $3.80 a share next quarter. I don't know if that takes into account the interest rate swaps or not. Guess we'll find out when the quarter ends. All right, so we've sold off Millennium. Let's clear this and reset it. Oops. Okay, and so I guess the next one up would be Royal Dutch. Because we only have 3 stocks that we're tracking now: Royal Dutch, the bank, and Nippon. And Nippon made it up to 800. Alright, so let's get to the earnings report for Royal Dutch, because I hope to do some more work there. Alright, so 26 cents. Down from 36, but up from the projection and last year. We paid back $1 billion on our, well, $800 million on our bank account, and we had a surplus of $5 billion. So that means we can grow higher, grow faster without going into more debt. Or we can pay our debt down. The question is, which one makes more sense? Holy cow, look at how big he's expanding. Now, why is it that we enter an industry and they immediately feel like they have to do this? Why is that? That's crazy. Well, we can deal with that the way we always have. Frozen. Let's freeze Lukoil too while we're at it. Okay, let's go back to Royal Dutch. And we're projected to make $1.02 next quarter, which is excellent. That'll be 5 times more than we made all of last year. So our stock price is currently 26, which is still below our net worth, but we're going up. Alright, I think we should grow some more, but I don't want to go crazy because I still want I don't want to pay down our debt, but I don't want to incur more. So we got to find that sweet spot. So I'm going to make it 10% and see how we do. We could probably go as high as 15, 40% of our pre-tax return and still not incur debt, but I'm going to be conservative and just go to 10. And if we still have a surplus next quarter, then we'll raise it some more. All right, let's pay down our debt, that $5 billion. What's the interest rate on our bonds? 8.5? That's fine. We're paying 9 on our bank loan. And our commodities futures are still going up because the crude oil price is going down. Okay, so that's all we need to do for right now. Except we need to cancel these interest rate swaps. Four of those suckers. Let's get rid of those. That'll help too. Okay. And we made it to very capable. So everything was looking up. Except for the expansion by Exxon, but hopefully we've nipped that in the bud. Let's see if he has any cash. He has some. He has some cash, so that won't come down immediately, but it'll have to come down eventually. At 52%, and he's got $370 billion in assets, so shouldn't be long. 1 quarter, maybe 2. Let's look at Luke Oil too while we're at it. He doesn't have any cash. Okay. So I think that's all we need to do here. We're finally up above. Okay. Next one up is Nippon. 1590. See what not having interest rate swaps will do for you? That's superb. Very capable in deteriorating market situations, so we're going to have to take a look at that. Looks like we're going to have to borrow to pay our taxes. All right, let's fast forward to the earnings report for Nippon, and I'll be right back. Nippon did very well, $15 a share. Down from the estimate, but up from last year and last quarter. And we didn't have to borrow, so that's excellent. We had a little bit of money left over. And this is pretty much what my goal is. I want to maintain as close to zero cash balance as possible. Whether that means growing very little or having a high dividend or simply selling it off. Because I don't go for high dividends if it's something that I own, but if the bank owns it, that's fine. But anyway, let's go to Nippon and take a look at the industry. All Alright, they've jumped to 12% growth. That's China Mobile. We got some bargains down here to buy up if we want. And it's still at 4%. So let's see. Our earnings are still growing despite the fact that the industry is deteriorating. So what I want to do is I want to grow just above what it takes for this industry to be deteriorating. So let's play around with our growth rate. Currently growing at 14. Let's back it down to 10 and see what it says. Still deteriorating. Let's try 8. Still deteriorating. Well, I don't want to take it much lower than that. We've got a surplus already. Let's leave it at 8. That's what the long-term growth is anyway. Alright, let's go and do the calculation for this again. I think we said 1900, right? $403,264. $403,264 times 5 divided by 1,000. Now it's up to 2016. Why is that going up? We were at 1900 and something earlier. Did we buy something else and merge with it? I don't remember doing anything like that. Oh well. Well, our earnings are way up. So, and they're continuing to go up. So we're going to just ride that for now. We've been going for over an hour now, so we're going to call this apart. We're going to come back and figure out what to do with this other $300 billion that we need to invest somewhere. We didn't make any money this game. Of course, we didn't play very long either. We only played like 5 months of game time. But this will continue to grow up. The reason why it's going down is because SunTrust is earning less money off the interest rate swaps. They were trading at $188 a share. We're now down to $180. It's still an excellent return. We're making money like crazy, and should continue to go up. The weird thing is that this interest rate has gotten higher despite the fact that the Fed is easing rates. Oops, wrong button. It says easing, but it's gone up. It went from 6.25 all the way up to 8, all the way up to 9, despite this easing policy. Okay, I'm not sure why that is. Could be, part of it could be that the GDP growth rate is negative, and this is a huge negative. It's rare that you'll see it that low. But in any case, we'll call this apart. Please like and share, and until next time, have a good one.